All right. Hello, everyone, again. This is Mantle Enterprises 2015 coming at you live with our Scorpius Terminal. So I've made, what you could call a breakthrough, I think, with this spreadsheet. I've been constantly updating it, and I just wanted to share it with you and kind of show you how you can trade and analyze stocks quantitatively. You can conduct your own quantitative analysis, if you will. You can kind of trade like a hedge fund, and let me show you how. So we've got all these indicators, and again, if you've seen my previous videos, it explains like the meaning of these various things on the dashboard, and then a lot of the information that we have on our stocks tab, right? So when it comes to how hedge funds like to analyze their stocks in a quantitative manner, they talk about things like linear regression, and they talk about 5 different criteria basically, and these are these people I'm talking about. It's Jim Simons of Renaissance Technologies, and you got Bill Ackman over at Pershing Square, and we could go down the list about hedge fund managers, but we'll get into linear regression first. So linear regression, the main principle is that there's a trend. There's a long-term trend with the indexes, with individual stocks. If you look at the S&P 500, you always hear that the average is somewhere between 7 to 11% per year over the long run. That's over years and decades, right? Even 100 years almost, right, of tracking the stock market. There's a linear appreciation that averages out to 7%. So you could say that in a low year, if it's below 7% returns, that would be a good year to buy for when it comes back to the linear average, and then you would effectively be buying low, buying at a discount, and then it comes back up. You're making more money. So you can do that, and the way the market typically functions is off the 50-day moving average and the 200-day moving average. That's just what people have used, and you'll see prices kind of bounce off those moving averages as algorithms and as the accepted trading firms kind of use that metric, right? So that's linear regression, basically buying below those moving averages or buying when stocks kind of go towards those moving averages. Over the last 2 weeks, we've seen the S&P 500 kind of hit its 200-day moving average, maybe dip below it a little bit, and then it started to kind of come back up. And you can see that reflected in the volatility over here, where we got over here to 30, and now we're coming back down. Volatility tends to go down over time, over the long run. The relative strength index for the S&P 500 hit below 30, and it started to climb back up from there. Now it's at 37, right? So that's linear regression, buying when the price comes back down towards the moving averages, and then making your money when it comes back up to that overall upward average line, that linear regression. Okay, you can say the same thing for the short side. If the stock gets too high above the moving averages, the return to the mean could mean that a short position would make you money if it goes back to the mean. Of course, that's not guaranteed. Short positions can be very very risky, especially if the stock goes against you. So we're going to talk about the Quant List now, and we'll discuss the 5 criteria. Here it is, and it's populated from my stocks tab. So what I did was I took data that I already had, things like earnings per share, 1-year growth, 5-year growth versus the S&P 500, price to earnings over the growth ratio, and then a couple other things. So if we go over here to the quant column, we got, so if the price to earnings ratio is below 25, if the price to earnings over the growth ratio is less than 1, and if it outperformed the S&P 500 over the last 5 years, if it also has a 1-year growth of over 20%, and if the earnings per share is greater than 0. So these are companies that make money, have positive growth, outperform the S&P 500, and are considered, below fair value for price to earnings over the growth ratio, okay? And that's a combination of ideas that I've taken from guys like Peter Lynch, Jim Simons, Ray Dalio, etc. So, and some research that I did online too kind of indicates that those are the things that hedge funds kind of look for when they are evaluating stocks. And what really made me happy was the other day, it's not on here right now because this list constantly updates. Companies like Lowe's, Target, and Home Depot were on there, which Lowe's is a big one that Bill Ackman is invested in. And then there's other hedge funds that are in Home Depot and Target, and they've been in those for a while. So when I saw those show up on this list, I knew I was headed in the right direction. And as of right now, you can see there's Qualcomm, SCI, URI, American Express, Perion, and Lennar Homes. And so what I've done is I've put my own money in five of those, five of the ones that were in there a couple days ago anyways. Again, the list constantly changes, but the principle of how this picks these remains the same, okay? And, I generate this list using like a query function and everything like that. But anyways, I expect to see great returns out of these, and if you want to trade like hedge funds do, you're more than welcome to visit our website, mantelenterprises.sellfi.store. We'll have the link below the video. And we have Scorpius Terminal is available as a subscription. I spent a lot of time perfecting this, and I'm very excited to constantly be making headway, conducting more research and development on this, and it's really helped me and a lot of other people make some really good trades, if nothing else, just off of these moving average indicators, right? I mean, if a company like Google, Apple, Microsoft falls below those averages, I mean, it's telling you when a good time to buy might be. So, this is not financial advice. I'm not a financial advisor. I'm just a guy with a spreadsheet trying to help y'all make some money. So I hope you enjoyed the video. If you like and subscribe, you'll see more stuff like this. Thank you very much, and happy hunting.